Hello, traders. Gary Wagner with the Gold Forecast here. Approximately 10 a.m. in Honolulu, Hawaii. It is Wednesday, the 4th day of April, and this is the Daily Report. We have gold continuing under pressure this morning, currently trading off about $20 at 15.15. It has had a low today of 15.05. On today's report, we're going to be looking at those price targets to re-enter from the long side as traders, our patience does seem, at least on a tentative basis, to be paying off, and this marketplace is genuinely trending lower, correcting to a point at which we believe that that impulse wave number 5 will begin as we conclude our current corrective wave number 4. Let's get right to the board. When we take a look at our long count, this of course is the intermediate. 1, 2. We had this large 3. We are now in wave 4. To me, there's absolutely no doubt. Of course, I set out a signal at the top. I did believe that there was a high likelihood due to a number of factors that we were going to enter this corrective phase. We did raise our stops. We did pull profits. In hindsight, that was absolutely the proper thing to do. Now comes the next question, which is what do we do? Where do we re-enter? Fundamentally, nothing really has changed in my mind to cause me to believe that we have exited this Super Bowl cycle that we're in. I believe that any fundamental news that we see out in the marketplace right now, I will acknowledge as yes, we are in wave 4. That's the best way for me to put it. Now, where might wave 4 end? To do that, as we always do, we go to Fibonacci because our Fibonacci retracement is going to give us targets. And what you're going to see is one of my critical targets, which is 1502. That's the 38% retracement level. And I'm going to put that up for us right now. I just want to darken that in. But this is that 38% retracement level. And we actually did hit that this morning. As you can see, quite eloquently, we are very, very close to the one level that I feel we should acknowledge because to me, this is in all likelihood. In other words, I think that there's a high probability that we are looking at the bottom of this corrective cycle, meaning wave 4. However, I do want to wait for some sort of confirmation of that because if it does slip, and traders, again, I don't think it really will, but if it does have another leg to go through, which would break it below the $1,500 mark. For that reason, my personal sentiment is that this area here should hold. So we'll talk about a couple of strategies all in today's report. Traders, I wanted to spend a moment looking at really the big picture here. I wanted to kind of condense this chart so that when we look at these retracement levels that we are looking for in terms of this corrective wave, and as you notice on the big chart, I have added this as wave 4. I think that right now we can officially say that we have entered this corrective wave. Now, the reason for bringing this bigger chart up is to really give us an idea, an indication of what kinds of moves we've seen in this market. And when you consider these, and this of course is a minor count in pink, when you consider the types of moves we've gotten through this wave, and then when you consider the shorter retracements that we've gotten. So when we look at this large 3, the top of 5, and this is also the minor and intermediate 5 both at once. And then when you look at the intermediate, that's that middle count, the middle counts in blue, of course, you have this very, very quick A, B, and C. You also had a streamlined marketplace that moved up. Because it moved up so quickly and fast, we then went into our impulse 1, corrective 2, 3, and now we are in corrective 4. Now, when we consider the sizes of the moves that we have seen in the corrections, these first corrective waves, such as A here, such as 2 here, and then we look at the distance that we've gotten in 4 here, you can see that in terms of the relative distance that they have moved, they are pretty much in line in terms of amplitude. When I say amplitude, I'm simply meaning the distance that it moves. So when we consider it in that light, it does seem likely that this, in fact, could be the bottom or the end of this corrective wave. That's 1502, and as I said, we hit very, very close. Now, if that does not hold, the next logical level is 1480, and that is a 50% retracement. Now, because that dips so far below 1500, my gut sentiment is that the market will probably not only attempt to hold that 1500 as a benchmark, but have it become critical support. Now, traders, for the last chart of the day, I have taken our master chart, our daily chart, and I have converted it down to a 240-minute chart. 4 hours per bar gives us a much greater indication and a much more in-depth view of the recent trading activity, but it is still, in terms of a time parameter, long enough where we're not looking at the minutia, the smaller, very, very idiosyncratic parts of the trading cycle. A couple of things become evident and clear. This double top that we've hit here, that's pretty clear. And then, is this going to be our support level right in here? That's going to be our next question. As you can see, I've got our next target, which is 1480. My personal sentiment is that we will probably now reach that. Now, that being said, should we take a position in this area? I think taking a position in this area is higher risk, but it is a doable strategy. Now, the only way that I would recommend implementing that strategy, and what I will recommend, is that we use a small amount of our trading capital to enter a long position in the market, reserving at least 50% of that for a dollar cost average should the market either A, track back to this lower area, which is the 1502, and try to test 1500 again to strategically add to that. In terms of a stop placement, the only place a stop will make any kind of sense has to be well below 1500, and you would want it almost below 1480, but that's a pretty high risk trade. My recommendation is going to be that to make this a good trade, you want your stop right in here, which is going to be around, say, 1475 on a stop, and you would enter a position from the long side, and that long would be using only half of your capital within the marketplace itself. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange